So, what we're going to do, right, we're going to review. So you can see, I've already marked this because obviously as the previous week's gone on, I've done all of my market structure markings, I've done all of my swing points, and then I've kind of moved it on from there. But what I've done just for the sake of the session and reviewing where we are in relation to price action and obviously market structure, supply and demand zones, I've deleted everything, and we'll just cover this week. And I intend to do this once a week, probably for Sunday, and then it'll prep us for the week ahead. It just makes sense to do it that way because at least it'll give us some identification of any potential demand zones and supply zones in and around these areas, right? So, let's get at it, right? So, obviously, this was last weekend, right? We had this last weekend price action. And so, the last marking I made was here, right? This, because I use a cap, right? My BTC is on a cap. That's because the funded challenge that I'm with and the funded account is with a cap. So I use their liquidity provider as my price. So it's not USDT, it's just BTC USD. It's the CFD for BTC, which is just it's just a liquidity provider. They actually they provide for a lot of these funding trader companies a cap anyway. So what you tend to find at the end of the week, you always get this random wick here. It's not real. That wick is just where I think they have a pause. They do some sort of a gap or a pause, these liquidity providers, and then when it kind of re-enables, it just puts it wherever the price is. So for that random reason, that was just a continuation of this move. This wick does not count, right? And so we're going to start here, right? And what we're going to do, we're going to bring price action to here, right? Now look, we know, of course, weekend starts, so this comes into Friday, right? And then I've marked this as a dot because obviously with foresight I know that the next move here breaks the next high, right? And so what is the current traded range as we see it there? Yeah, it's here, isn't it? Right, that would have been the current traded range, and weirdly enough over the weekend, which we don't tend to normally get on a weekend, it just absolutely blistered right out of the gate, right? And so at this moment in time, we're not thinking about supply and demand zones. However, I would argue that this is a valid supply zone here. A demand zone, right? Simply because, no, technically it's not actually, because number one, it hasn't broken structure, and number two, there's no, that fair value gap between here and here was filled, right? So that wouldn't have been a valid supply zone. So let's just play forward a few beats, right? Ignore that scam wick. But then we did get that breaker structure. So what I normally have is, say, this would have been a weak low, right? Because we were bearish. Sorry, a strong low, and this would have been a weak, strong high and a weak low. It actually broke, right? And so what we call that is a trend change, yeah? So we've gone bearish, 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 and then broke through. So what I have on my templates is I have just all of these 1 minute up, 1 minute down, trend change. TC stands for trend change, right? Because there's a level of significance whenever we see a trend change. I don't pay too much attention on anything below 15 minutes, if I'm honest. I only really focus on 15 minutes or above. But once I get a 15-minute trend change, in my mind, there's a level of significance around that, simply because it's a decent enough time frame, and it's a time frame that a lot of people actually trade on. And so we would mark that as a 15-minute change, right? And so if we go back to those previous rules for supply and demand, what do I always say? Well, what's the kind of thing I'm looking for? When we get a break of a trend, whether it's a trend break or whether it's just a continuation of a break of structure, yeah, so if price comes down again and breaks this level here, that's another break of structure. What is the price action that caused that break? Right, where is that area that created that move? And do we get any kind of significance around that? And what I mean by that is, like, if I look here, right, you don't see it on a 15-minute, and this is why we've got to sometimes move up a few time frames. If we don't see it, if it's not clear, we move up a time frame, right? So the 15-minute, it's not clear exactly for me where the supply zone is, right? Now remember, can I just check with you guys? Do you know what I'm talking about when I'm talking about imbalances within the chart? So a fair value gap as an example. Do you guys know that? Otherwise, if not, I can go over it quickly for exactly what I'm looking for. Perfect. Okay. It's this imbalance in the charts, right? It's where we get this disproportion between buyers and sellers, which really pushes the price right through the order book, creating a significant move, a lot of slippage. But clearly, when you get that much price action that moves the markets that much, we've got to pay attention, right? And it doesn't matter whether it's on ACAP, doesn't matter if it's Binance, doesn't matter if it's MEXC, ByBit, whatever the kind of price action is, because majority of you're going to use the index price, right? And the index price is the average of all of those exchanges, right? All the top exchanges. So it's always going to follow the majority of that, and you'll get all of the kind of algorithms and automated bots that will quite closely follow that price anyway. So it doesn't really matter for me. It doesn't matter what exchange you're on. Typically, it's going to follow that same move, okay? And so it's not clear to me, right, exactly where this would be a demand zone for us, right? It's not clear, but so I want to move up a bit. Now it's starting to look a bit clearer. Let's go up to the 45 minute. Let me just bring the candle forward one. Okay, so there's our fair value gap there, right? Let's go on again. Sorry, not go on again. Let me just bring up another time zone. Now that feels a bit more clearer to me, right? So I'm looking, we've got the move that made it, which is here, plus this. So what I would do in terms of my zone, I would cover both of these, right? And for me, whenever we're talking about supply and demand zones, you don't really want a really tight supply or demand zone, because more often than not, what we're not trading is, we can trade this way, but we're not trying to just trade a limit order and a fit and forget. What we're using these areas as optimal areas to trade in, right? Area of value, a zone that we're really interested to start really scrutinizing the charts and diving deeper. If we just have a really tight zone like that, and you put an alert on the chart, well, number one, you probably won't have enough time to even calculate what you want to do when it gets to that zone. So you'd always want to try and have a bigger zone if possible, right? And so that's why I always like to kind of give myself a bit of breathing space when it comes to these moves. And so, I'm going to put that on the chart. So this is a 1 hour. So I would just call that on my templates a medium time frame demand zone, right? So that would be the first zone I've created. After the weekend's gone, obviously we created this trend change, and that's fine. Down to the 15 minute again. And now I'm just going to see what happens when we come down to here, right? Okay, so let's just play on a little bit. It's the first zone that I can see, at least as I map on. Okay, so let's bring it forward a bit. So let's imagine, right, just as a, without going down into the detail, let's say we want to go long, right? And so you might want to just clear. I always tend to just try to clear the liquidity between here. So that's that last low point. So maybe you want to just kind of go somewhere below that. And I'm always wanting to go at least a 5-to-1 risk to reward, right? That's kind of that sweet target, because we can get 4 of these wrong. We only get 1 right, and obviously we're in good profitability, right? So let's keep going. Just another thing for me, my own personal stance on this is, whenever we get, and something to take note of, I'm not looking for supply zones when we are structurally bullish, right? So we've become structurally bullish when we change this trend here, right? 15-minute trend change. Demand zones absolutely in play. For me, supply zones, unless you want to be trading all the time and you want to be in daily and you want to kind of keep that trade moving, possibly. But for me, I'm only really thinking about demand zones, not supply zones. That means price has to come back into an area and follow the trend. That's what I want to be catching, right? Just check there's been no quick questions in case anyone's No, cool. Actually, Kick, because I can't see the screen, do you want to dive up on the stage with me? And if any questions pop through, you can field them for me. Would that be okay? If you're available. If not, don't worry. Just what I don't want to do is whiz through this and no one gets any value out of it for any reason. So if you can jump on the stage, matey, that would be great. If not, don't worry. Okay, so let's continue on, right? So this is previously right on last weekend, as we know. So weekend comes in, obviously we break through the 15-minute. Do we tap that? Yeah, I'd say that's a tap. Okay, so we're in business, yeah, and we want a 5-to-1, right? So on the 15-minute time frame. Remember, we had to expand the time frame to get this demand zone, right? Because of the 15-minute, that's not clear to me exactly where it is, and so you can scruffily just cover the point that made the break, which is here, and the kind of top of that candle. But obviously it becomes clearer the higher you go on the time frame. So just remember, the 15-minute is what I'm using to kind of analyze, but sometimes to get a better supply or demand zone, you just need to kind of manipulate your time frames a little bit. Okay, so let's keep going. Dips back into that demand zone again. Just tighten this up, move this along a little bit. Let me just hit play, speed it up a little bit. So you can see, we know this is an active supply zone, right? The reason is you can clearly see it's acting as that nice buffer, right? Now what makes this a demand zone? Well, clearly, right, this huge move here, that imbalance that we've seen, this collection of candles and the push that broke this 15-minute trend change was essentially that. And you can just see how much it's being respected, right? Prices coming into it, getting rejected. When we say demand, it's where buyers are stepping into the market. Obviously the opposite is true if it's a seller's market. It's where supply comes into the market. It's where people are selling, right? And so you kind of get a sense that this is a supply zone, even if you're not completely perfectly accurate. No one can tell you this is the exact demand zone. It's between X and Y, because no one knows, right? You've just got to kind of, that's why I try to stick to rules personally, but there's no right or wrong. Well, there is wrong, but don't get hung up over the size of the zone. Just try to capture as much as you can. If you're not confident, move it down to the lower time frames, or move it up to the upper time frames to get a bigger zone. Once you get that bigger zone, think about it like this, right? We had a nice little move in here. We've wicked into here. If we was to go down to the smaller time frames, there'll be probably fair value gaps and more supply or demand zones on much lower time frames here as well. Let's continue. Still confident. Okay, so look at that, right? So we dipped so deep into the actual demand zone, and look at that for accuracy, right? Just to clarify, now we pick the candle that creates the move, right? And so that's the deep. We don't expect that to break. If that breaks, right, this is the significance here. I just want to bring this up a second. If that breaks, we've had a trend change again, right? So we've gone bearish. Look how close we came. And I think, for me, it's the power in market structure, because it's a different dynamic. Then once you get a trend change or a trend break, you're flipping to supply rather than demand, and so you've got to keep that in your mind. So look how close we came down to that move there, right? So I'm just gonna bring this down again if I can. I don't think I can now. Anyway, let's just continue on. I think we had to stop just underneath here, right? So let's continue. Actually zoom that out a bit. By the way, so our loose structure, right? So I'm just gonna clean this up a little bit for us so we're not getting lost. So this was the high, right? Created by here. That's our move there, right? That is our move there. Now, you could argue that actually, rather than going a 5-to-1, do we just want to cover the trade by bringing it down to the actual high? And that's still a valid opportunity for me. That's also something that I would work to, because I'm only interested in the break, right? Because if it goes above that and beyond that, brilliant. You know, I may have missed out on a few more risk to reward ratios. However, it's this point that, because I know that this is now the strong low and this is the weak high, that I anticipated that breaks. And it's almost like, for me in my head, it's like a guaranteed position that not guaranteed, but if you're bullish and you think the trend's going to hold, it's a guaranteed position for me. So that's the actual move there, right? So that's that new market structure. So whether you go for 5 to 1, let me just take that off the chart because it needs to be cleaned up. It's not giving me the we're about there, right? Something like that, and then that's a 3 to 1. Don't know whether we would went 5 or 1. Let's just see what it looks like anyway. Okay, so let's keep play. Ah, it smashed it, right? So you'd have got at least 6 there on that trade. Let's let it play out. Anyway, so that would have been a successful trade, right? First one is, remember, weekends, this is still the weekend, right? So this is the Monday now. So let me take that off the chart. So Monday is kicked in, right? And it's absolutely melted into the sky. So what's our structure, right? So this is now our first 15-minute breaker structure, because what we got prior was this trend change here. Okay, got the trend change on the initial one, tapped into the first demand zone, and now we've got to look at the second demand zone, right? So over the whole weekend, for me, there was just this one demand zone here, right, which was tapped beautifully, and then sent us on to up to wherever we need to go, right? So now it's like, okay, well, what was the move that created that break? Well, I would say it was here, right? So this set of candles, maybe it's debatable, but this would be my low. Okay, so bringing that to there, and I'm just going to bring this in here, right, somewhere like that. We don't know where the high is right now, so I'm not going to bother putting the line, but I could just do something like that for now. Wherever it lands is when we get that pullback, we'll know that that's the top, right? So let me just zoom in a bit. Now we've got to pick a new demand zone. Okay, so again, my eyes are drawn to this area here, simply because it was the move that created the break. Remember, I'm not interested in supply and demand zones within the internal structure, because they're a lot weaker. There's no foundational basis for where money's come into that move if it's just internal. And so when we break a trend like this, like we did on this one, there's significance in that. Clearly money's come into the market, so it will act as some sort of a demand zone, right? So let me just move up a time frame. See, that becomes a lot clearer here, right? So I would say, for me, this candle here and in and around there is that kind of doorstop for that area, right? And so I would say, let me zoom in a little bit closer for you so you can see it clearer. I would say, you see, you've got a fair value gap here, right? Which you would argue that is the demand zone there, okay? That candle, but it's too thin for me. I don't like the thinness, or I just don't think it gives enough time for you to move into that move. So I would probably want to capture this one as well, because that was a nice move there on that candle. And so, the fundamental for me is the break, right? This move broke that structure. So this area intuitively is that demand zone for me, right? So let's see. Let me just bring my magnitude on. Bring it up to there, and that's a big demand zone, of course, right? So let's see, medium time frame demand zone there, and so we'd want to refine this a little bit, right? So maybe we could say, okay, well, what does the 15-minute look like? And I can see a nice move here. So I'd probably say So we've got the main one that gets us in the zone, right? That gets our kind of juices starting to move. But I can see here is the start of that demand zone. So I could probably refine it a little bit, and I'd call this a lower time frame demand zone, right? Now, you don't have to do this, right? All I'm doing at this moment is just going over where the demand zones are, right? But there's an internal demand zone within a medium time frame demand zone, right? And so what I'd probably do is, the moment, like I said last time, I normally would want to put an alert on the chart here. As soon as that alert triggers, you're zooming into the chart, you're going down to the 1 minute time frame, you're seeing how it respects these zones, and then when you get a bounce and then it comes back into the zone, you're then going to take your trade, right? And so let's just continue. Let's play it out a little bit. Let me just zoom out and go back to the 15 minute. So again, for us, we're only thinking about longs, right? We're only thinking about demand zones because structurally we're bullish. I'm not interested in shorts at this moment in time, but still such time that I see a reason to doubt it, which is a break of structure, trend change to the downside. Okay, now I'm flipping to supply zones. That's it. There's no in between. I'm not, because it's too risky, right? You can get into supply zones and get the pullbacks, but you just don't. I don't think it's a sensible way to trade, in my humble opinion. So let's just continue where we go here. So let's see. So we wicked past the initial supplies, the lower time frame supply zone, but we're still in play on the medium term time frame. So how would we have addressed this? And so there's a couple of ideas, right? You could have said, okay, well, if we went along from the area that we wanted to do, and say we just wanted to cover liquidity there, this is, so far, this is our high, right? Actually, this is the high, okay? Because this is the candle that created that move down, right? So as far as my rules are concerned, it's the candle that creates the move. So we pull down, that wasn't the move, pull back up, then we pull down. So that is the high that created the low, okay? So far, but we haven't broken supply yet, so it's still the high. If we break down and break this area here, which we should put a dot on actually, on the highlighter, just so it's clear. Highlighter tool here. So that is the bullish dot. And so far we're here. We can't put a dot on there yet because we don't know that that's the high until we break this low, okay? Just for clarity. Okay, so where would we want to, at least we want to target here, right? Which is the high. That's only a 3.44. So what you can do, right, sometimes once you've figured out your low, where does it have to go beyond? I mean, that's the low. I mean, I could say, okay, that's the lowest point that the price needs to go for me to move out of the trade, because if it gets past there anyway, I know that now we've flipped bearish on the structure, so I don't really want to be in a long at this point anyway. So you've got to figure that out. But once you've figured out your target, to get a better risk to reward, you're gonna get less opportunities. But what you can do is move this parameter. Now look, if your goal is 5 to 1, then take it at 5 to 1. I'm just looking at this here, right, and I'm just trying to figure out where 5 is. It's about there, right? So that gives me a bit of clarity to know if price comes back up to there, that's another 5 to 1 risk to reward ratio. Now it tagged this low term time frame demand zone pretty much perfectly. It wicked slightly below. Let's continue. A couple of dips. Oh, beautiful. So came into obviously the supply zone. It got past the lower term time frame, so this initial one wasn't perfect. Still enough demand came in though, and then of course we got that move up. Would have got us our second 5 to 1 risk to reward. So theoretically, and I know this is like utopia and not really cherry picking, I'm going to do this week on week because I think it's good to identify the supply and demand zones so that when we're trading, we can say, okay, this is how it came out last time. I just think it's good practice, right? So theoretically, we're in two decent trends that give us a nice 5 to 1 risk to reward. And so we've now got to mark this as a break, right? So that's our, because technically for me, wicks count, yeah, because my argument is if the wick was strong enough to break the high, well, that liquidity is now gone. So that liquidity that was being held up as a stronghold as broke, right? So we have another trend change. So we can remove that. The question is, that was the... It's debatable. It's either that one or that one. I could get on both, but for the sake of here, we'll say that that's the low, right? But now what we have to do is something a bit different. So it's now the question I always ask is, what was the move that created the high? Well, of course, it's that right there. Yeah, we had a little bit of lollygagging. We come back up, and then we come back down into the demand zone before making that nice move. So that's a really straightforward one. Like, that's easy to see. I'm just going to clear that out. And so our new structure, or our new traded range, is here. So let's just, let's just create that. That was the demand zone there, right? So that was a nice trade. This was obviously a nice trade. And where are we? So that was the weekend session. This was Monday. Let's continue on. And we're still bullish, right? So what would we look for now? So theoretically, you're looking for another demand zone. So let's see. On the 15-minute, I don't like it. I mean, look, it's tight. So I don't know if you can see this really tightly. Right, yes, we created that trend break with these series of candles here. But if I was to accurately do the 15-minute, which I wouldn't do, that is the theoretically that demand candle. It's too small of a zone, right? And so this is where I'm now moving up. And there's no, if you say to me, well, how big does your zone need to be? It's got to be subjective, right? It's got to be enough time. Like this, it's plenty big, right? Look how many opportunities you've got to get into longs when we're tapping this demand zone. And so if you've got a really tight demand zone, you might not get back, you might not get another opportunity to get back in. So you've got to be a little bit more liberal with your positioning on your demand zones. Just, you're looking for that optimal trading, right? So what happens next? We want to go up a time frame. Does that provide us any more clarity? It's definitely better. Let's move up to the 1 hour. Still not clear to me, but I'm starting to see now, I can tell like that position there is probably going to be, if we move up to the 2 hour, that probably is going to be a nice, cleaner move, right? Yeah, you got to see. So there's that 2 hour. So we have to go, so if you think about it, we have to go to 2 hour time frame to get that nice, clean demand zone there, right? And so let's go back to the 15-minute now that we've got that cleared up. And so all of these candles here, that was just one nice 2 hour candle, right? And so let's just mark this off. Oh, sorry. Just check you guys haven't asked me any questions. Yeah, it's crazy. The demand zones are really powerful. I mean, right, I think you've got to, in your own self, right, there's tons of indicators out there, price action concepts by Lux Algo comes to mind. There's lots of these different ones, but always try to be able to do the fundamentals yourself. Always try your hardest to be able to say, okay, well, can I pick a supply and a demand zone? Do I understand? Have some rules around it, and everyone's going to have a different variation. I might have a different take than Kevin, as an example, or Kik or Roxas, or people have different ideas. I just like to make sure I've got something in my head that I like to go with, and if it's not clear, moving up a time frame until it becomes clear. And then when you move down to the lower time frames, things just is like, okay, so I know that on that lower time frame, what wasn't clear on the 15-minute has now become really clear to me, because all of this noise here I know is a demand zone right now. This might not all, by the way, because we know anyway price comes back down after that move up, doesn't it? But let's see. So This would be a medium term demand zone, yeah. So let's just bring that in a little bit. I don't know how far we need to go. But obviously we've got a nice wide range now, right? So you can see the ranges are starting to get more wider, which was, and the reason, by the way, and so like the reason I put these dots is so I can look back at previous swing ranges and I can see at a glance. I'm just not getting a bit loose here. Where was the previous one? So that was here, right? You know, higher, lower high, higher high, higher low. So far, I'm not going to put that there yet because, again, I don't know whether we break it. But so yeah, let's continue. Play it out a little bit. Okay, so let's just look at what's happened here. Just technically, that's also a supply zone there, right? And you can see, you know, we've got a tiny fair value gap there. Okay, now this is a more, I guess, thinking of where the retracement, right? Like look at the distance between where we've had to come into. If I go to something like this, and you see these pretty much on, not this one, but you see these all the time on smart money concept kind of trading. It's where's fair value, retracement value, not that one. Sorry, fellas. Fair value. You know, that is like, this is over 75% retracement that I'm expecting. Now look how close we came into it there. Just front run, right? So that's we may miss that, but let's just see how it plays out, right? But obviously no trade at this moment in time. So where's our trade going to be? Now look, remember, we've had two trades which, let's just say a ratio of 10x, right? So 10 lots for your initial size, right? Where's the long position? So let's just say, I don't know. And again, I wouldn't trade like this. I don't necessarily trade like this. What I'm doing is, because we're just reviewing, right? So it's nice and quick and nasty. But when we're actually trading live, you're waiting for it to come into the zone and you're scrutinizing that 1 minute, right? But we're just doing this kind of to kind of speed through. But if I was risking one lot or one BTC or whatever it would be, I'm 10 up at the moment, right? So remember, if I lose at any point, which we gotta expect to lose because we know price doesn't go forever, I take that as an acceptable loss, right? Because I know how I'm trading. My trading methodology is always ironclad. It's like I'm trading supply and demand. I'm trading the trend. I'm waiting for price to come back into that demand zone. If it breaks, it's okay. I'll take the loss. I flip me switch and I go look for supply zones then, okay? That's just how it is. You can't just always think everyone's got to be a winner. Accept the losses as just part of that trade. It's absolutely no problem, because what we're aiming for is decent risk to rewards, right? And so, you know, on this, I'll just bring this down to, so I've got a 5-to-1 there, something like that. Stop is just below the demand zone here. Let's play on. Just bring this over. So this, by the way, fellas, this is actually to be a bit more practical, right? So we had a break, so we've got to just map this out a bit. So that's there's the high there. Okay, so that's the new, actually move that up here. That's the new high. This is the new low now, right? Because that's this big impulsive move is the move that created it. So we bring this here, and then we get another 15-minute break here, right? So we've got to mark that up. So that was 3 breaks to the upside in the row. 15-minute up. Let's just bring this in here. So then what we want to do, just very quickly, mark the bottom, because that's legitimately there because we made the break. We can't mark the top yet because now all we are is in a traded range, right? So this is a very important point. This is just noise to me when I'm trading, right? We're trading in a range it's internal to this 15-minute range. Now, if I go into the 5-minute range, well, this 15-minute is theoretically the external range to the 5-minute range, if that makes sense. It just means that I can start creating new trend ranges within these to make small scalps. The only problem I have with that is when I'm doing that, it's like the higher the time frame, the more respected the market structure is. Like on the 1 minute, you're going to see breaks, trend change, break change up. It's just all over the place. It's really difficult to do market structure on a lower time frame. So I my stop point is the 15-minute. I think if I get below the 15-minute, I accept that this is just noise and I'm waiting for my opportunity to trade. Okay, and so now just to clarify, I didn't realize, but this demand zone is no longer in play for me because it's beyond the break. Okay, now I have to look at a new demand zone here, and if I look, it's probably already been tapped. I can't see the demand zone right now because, well, that's closed. There's no fair value gap there, right? But I'm only really concerned in the demand zone that's created here, so we have to go lower now. So let me just bring that in there. Perfect. On the 5-minute, yeah, you can see a perfect imbalance candle there, and there's nothing that, bring it down, we get a nice push to the upside. So I'm going to mark that on the chart, right? That's going to be a legitimate one on the lower time frame because it's clear. If it wasn't clear on the 5-minute, then I'm moving up. If it is clear, perfect. I'm going to map that on the chart, and you can see I'm just going to move this across. We can see we've got a couple of taps, right? That's a nice entry there. I don't think you're going to get your massive risk to rewards here, but we'll just see. So just to not laden the confusion, we are there and our move is somewhere there. What are we looking for? 5 to 1, which is about there. Okay, let's continue. Let's make that a little bit clearer so you guys can see. Okay, play. Okay, so that would have been a losing trade. However, we did get to, what would that have been if we'd have not been too greedy? Still a 3. Point we're trying to make is those demand zones are that was still a nice demand zone. I was probably a bit greedy. Now, if I was to, I'm not trying to forward fix this, but if I was to go to 50%, the trade wouldn't have hit anyway. But if I got into the 5, it would have tapped it, but anyway, that's just cheating. Okay, so that trade, let's say, went against it, right? But there was a possibility of that trade hitting and still getting 5 to 1 by using the demand zone, right? So just to clarify what I'm talking about here is, let's say you put your long in, and my default position, right, is I tend to want to go right at the edge of that supply zone, demand zone, sorry, and just being relatively tight, but not too much beyond that, right? Then you want to go let's say, put that wherever your target wants to be. So that would be the high. But you can obviously, like I say, bring this down. It's this one, sorry, to wherever it would be. So like, if you wanted to have less risk, that's still 5 to 1. That's actually 6 to 1, right? Because I brought my entry down. The problem is the entry doesn't fill there, right? So there's a debate whether you go at the start of the demand zone, or 75% or 50%. Well, 50% we wouldn't have got filled anyway, would we? We would have had to go about here, and to get a 5 to 1 there, you'd have. But that would have been a hit, right? So it's not perfect. It's not like, I always tend to just go here at the start just because I always want to be guaranteed that I'll get a hit. However, this is the whole point about diving into the multi-time frame, like going into that smaller time frame. Like, let's just see what we can see quickly, right? Because this is where I think is really powerful. So we come down, make the first hit of the demand zone. Let's dive into the 1 minute. So let's see what happens, right? Okay. So price comes in, This is the first time it's come into the zone, right? Now, if you're watching this minute by minute, right, think about it. You're starting to get nervous in your chair now as prices moving down towards your demand zone. But what are you doing? You're not taking the zone. You're not taking a trade yet, and you're probably not going to do a limit order. You're probably going to do a market order, right? So what have we created here on the 1 minute time frame? We've created that same imbalance on the 1 minute, right? Where is the move? See that? Inside. I don't know if you can clearly see because the grey, but if you can see that grey candle there. That's a nice big fair value gap created. It hasn't come down and took that liquidity, and so that's obviously where we take advantage of that, right? So then what can we do? Well, at least now you can say, okay, well, if price comes back into this zone, which you expected to do because it's created another imbalance there on the 1 minute, is you can then say I'm going to do a long at that point, and you know, put that to wherever it needs to be. But that gets you a little bit more of a refined entry, right? And clearly, perfectly, it comes back into that zone. I mean, it would be very easy and probably naive of me to just cherry pick this, but if you look at how powerful that demand zone was there, right? So on the 1 minute, because we're already in a medium term time frame demand zone here, right? So we can say, if we was to look at the edge and just below that, I mean, this is the kind of numbers you want to be talking about, right? Let's just see what that actually played out to, just for kicks, right? So it goes up to about there, right? Just looking at the height of where that was. That ends up being an 11-to-1 risk to reward because we went into the lower time frames. And the point I'm trying to make is we first identified the 15 minute, or the 5 minute I think it was, because it was nice and clean on the 5 minute. We waited for price to first come into the zone, zoomed into the 1 minute, waited for our entry to get tapped again, and then we were off to the races, right? And that would have been a lovely trade as well. These are the whole point of these recaps, to kind of go over these kind of things, to look at other type of entries, okay? So then what happens? So now we get a 15-minute reversal, right? So now we have a new trend change. So 15 minute, just go back. Go auto, just so nice and clean. So we now have I'll leave the demand on there. Now we have, just move that out of the way a second. Get that. We have a 15-minute TC low, and so what this does to me in my brain is like, okay, now I'm only looking for supply because I'm not interested in demand anymore, because we change trend, right? It's nice and easy because it doesn't convolute the brain. It, like, I only need to know where are we in respect to the supply and demand, the market structure, and where is the supply or demand relative to that move. So if I'm bearish, I'm looking at supply. If I'm bullish, I'm looking at market demand. Now clearly for me, right, this is the move that created that break, right? And because I don't want to get too much caught into the noise, this for me, this one big candle, this red candle here that you're seeing, is a nice big zone, right, that I can get into. Now I don't know where will be a lower term time, medium term time, medium for me. So just so you guys are aware, anything between 1 minute up to 15 minute, but not including 15 minute, is lower term time frame, right? LTF. Anything between 15 minute and up to 4 hours is medium term time frame. Anything beyond 4 hours I classify as high term time frame, right? HTF and demand and supply. So 15 minutes and above, up to 4 hours is going to be medium. So this is a supply zone now, right? So it's a medium term time frame supply. And now, obviously, because of the break, I'm waiting for us to come back into the zone. We don't know roughly know where that zone's going to be, because if you look here, you can see candle. It's certainly not clear. If we go a bit lower term time frame, it's not clear. Now it's clear. So you could argue that you could say that or that, but it's too small for me. That's the problem. It's too small of a time frame. Because I'd rather start big and then deep dive into the smaller time frames, I'm going to give myself a bit more breathing room that covers this congestion area here that effectively created this move down. So if you think about it, again, if we were to go, what's a 30 minute like? Yeah, perfect. You can see that there, guys, right? You can see on a 30 minute, you can see that's a nice, clean, clear previous candle that starts that move. Then you get the big imbalance, and then we don't come back and retake it. So that's a nice, clean supply zone for me now. It's not clear on the 15 minute, absolutely not, but it is on the 30 minutes. So just be mindful of that, right? So we got the break. So there's a couple of ways to look at this. We can, again, be really, really blasé and say, okay, well, I haven't really got time to analyze the charts. I'm just going to go in here, put me stop here, and well, we don't know where the low is yet, do we? So, you know, if you want to go to the 5, I don't know whether that's a possibility, but let's just 5 probably feels a bit high in terms of the distance it's have to travel. What's that? That's 3.45. Or, as I say, you can start to zoom in when we get to this zone. So for now, I'll just bring it down a little bit more. That's about 5 there, right? So let's just see. I know we don't go that low, but again, you know, if you want to tweak that, you can bring this up to maybe the 50%, and then we bring this back in to get to that 5, right? So what's that get us? And we just bring that up. 6, 5. There, right? So somewhere around there. So let's see what happens. Let's hit play. Oh, look at that. Love it. Boom. Another 5 to 1. So now we're flip bearish, yeah? So what happens next? We want to take the low here. So that was the low. We go across here. That's nice. Get it. So now, so this is the 15-minute trend change. This is just the break structure, so it's just 15-minute down. Okay, and then what happens? Okay, I'm just going to shift that off. So we've had what, potentially 3 wins, 5 to 1s, and 1 loss. Yeah, so we've had 1 loss, 3 wins for the week, which isn't too bad. Again, so what was the move that created this? So let's just get our structure sorted out. So quickly zoom in. So we had the high. This was internal structure. We got the break. The break was created by this, so that becomes our red candle here. Then we go to the low. What created this was here. So then our new range, is here. So we bring this down to there. Bring our supply zone back up. Somewhere around there, won't it? This is our new high. And we broke the structure. So what broke that structure? It came down to here. So we come back up there, didn't we? So what we've got to do again is just make another little structure break here, which is a 15-minute low. Where's that? Down. What was the high that what was the move that created that? So we have to bring our move down to there. Okay. So let's just put our dots. So we've got that. So up there. What's the high that created that? Was here. Okay. Oh, sorry. So then when we break that, so our range is now here. So we have this low. What was this? Just move that out the way. Actually, I think that was that alert. I'll delete that. So here's our traded range. We'll call that internal strong, right? So we don't anticipate the high to break, so we're going to call that the strong high, and we're going to call this the weak low, because we expect that to break, right, each time. And this is the range, and I think this takes us into the weekend, this now, fellas, if memory serves me right. So where is the next demand zone? Well, it's not clear, at least that from my interpretation there. Let's go to the 30-minute. That is though, isn't it? So we have an imbalanced candle here. Let me just zoom right in so it's crystal clear. We have this candle that comes down, this candle that comes up. There's a tiny imbalance there that you can't quite, I don't know if you can quite see it, so we're just going to mark that there. We're going to mark that there, and we're going to call that a supply on the medium term time frame. Template medium term supply zone. Go back to that 15 minute, and let's see. Let's get a short position somewhere there. We can go here. It is an interesting one. So that's the top of the supply zone, right? But because we're so close to the internal strong high, I'm just going to take it to the actual internal strong high. Even if it wicks above it, it's a trend change, right, to me. So it is what it is. And then what, we can either go 5 to 1, or we can, you know, go to the internal weak low because we expect that to break. And if that's not big enough, then we can just bring our move a little bit higher. That would be 5 there, somewhere around there. It's close enough, right? And then we go into board and weekend mode now, right? So let's just hit play. And we create a nasty triangle, right? So what happens? You can see this is liquidity build mode, right, where we don't get anything good other than just up and down movement. Oh, look at that. So there's our tag. Beautiful move there. And we know what happens here, by the way, don't we? We know price comes up and it goes down. So we get the fake move to the upside. When I say fake move, because it created that kind of triangle pattern after such a long time. Let's just extend these out. Extend that one out. This is just supply zone. Taps the supply zone absolutely perfectly, and we finished the week on another 5 to 1 risk to the wall. So that's that's how I, you know, that's how I'm analysing the charts, right? It's complex when you first get started because you've got to understand market structure, right? I'm just gonna flip to the server, but it doesn't have to be complex. I think most important is number one, first and foremost, getting your head around market structure. Don't make it complex. Have a set of rules. You guys have got my rules. They're in the video. Once you're kind of happy with your market structure, figure out your supply and demand zones. I go nice and easy. I just look at the candle that creates the imbalance. And remember, I'm only really looking at the first. So the move that breaks the structure, that's the most important one for me, because that's where the big money comes in, because it takes a lot to break structure, right? You get a lot of people going against it. Once it breaks, you also get a lot of the breakout traders trying to push that up. So you see a lot of big money coming into that. So that's always going to be a nice, whether it's demand or supply. The art is trying to get it clean. If it's too noisy and too fuzzy, zoom out on your chart a little bit. Go to the 2 hour, you know, go 1 hour, 2 hour, whatever it would be. If it's nice and clean on a lower time frame, use that as well. But just remember, the smaller the demand zone, you don't have a lot of time to be in with a shout and to kind of manage it, in my opinion. So give yourself a bit of wiggle room. I always try to get a little bit zoomed out, and as you can see, that would have been quite a nice trading week. Let's just say so. Hopefully you guys enjoyed that. And I think again we'll do this next week. Just before we go though, I think it's probably worthwhile just double checking where are we. So don't really have, because you could argue we've broken trend here, right? And so that now becomes the new trended traded range, right? Because this is the move that creates it. For me, it's valid because it's my rules, right? That a structure break, even as small as that, is a valid structure break. So theoretically, that's now the new range for me. And so, you know, where's the supply zone? Well, you can see we're still, at the moment, we're still bearish because we continued it, but that's on the 15 minute, that's actually quite a clean supply zone there. So that's probably what I'm going to look at initially. It's a bit small I would like it to have been a bit bigger. But this is now the new strong high, technically, because we made that tiny dip, but it still took the liquidity below the previous low, right? That was the previous low there. So it's took that liquidity. So that is a new break for me. So that's the new range. And we have a new supply zone just here, which is a nice supply zone, the medium-term time frame supply zone, which I'll trade. If we come into this zone, I'm probably going to look for shorting opportunities. Okay, so that's it really, fellas. Nice week. It was a really nice week to trade in, actually, if those opportunities presented themselves. But from the weekend right the way through, it's done the classic, didn't it? Right the way up, midweek, come right the way back down. You tend to see that a lot with the markets. I tend to find as well, it's the last 2 weeks of the month, and this is only my subjective opinion, but the last 2 weeks of the month tends to be the best weeks for that kind of activity. The first 2 weeks is a little bit here and there, I tend to find, but the last 2 weeks tend to give us that kind of, dare I say, predictive nature of that big move up and then a big move down. So we'll leave that one there, fellas. And if there's any other questions, next week we'll do the exact same again. Let's try to spot those supply and demand zones. As I say, try to weed out the demand zones that aren't really, that don't make any breaker structures, because they're not really that strong. But you know, on the lower time frames, remember, internal structure is still structured as well. So there are still opportunities there, but just look for those good ones. So good man, Jags. Mine and 9. Anything you've got? Obviously, you guys are in the VIP, and really appreciate that. And for me, I'll just thank Kev and everyone involved. Rolandinho, I'm sure maybe you've only just joined, my friend, so lovely to have you here as well. Any questions, anything that's not unclear, I'm gonna keep adding to that, to them training sessions as well, because maybe more about actual entry execution, so more around the kind of 1 minute time frame and a 5 minute time frame once you've identified a market structure or a zone that you want to get into. When's the optimal time to trade? Because we looked at a 1 minute really cool execution there that was like an 11-to-1 risk to reward, and so I'll maybe do something a little bit more on that, because that might be quite powerful as well. Kick is also putting some content together for you guys may have not seen too much of it yet, but the companion Apex screener, which is a really powerful tool. For me, when we mix all of this really good kind of way of trading, and it highlights all of these coins that are really kind of popping, that's perfect. Trust me, when we mix all of this, when we kind of get this down off pat, and we're really confident with our trading, then we move on to the kind of good stuff, which is all of the altcoins and stuff like that. Now I know Foxify doesn't look at altcoins just yet, but there's other platforms as well you can trade on. So awesome. Well, guys, really appreciate your time. Any questions, of course, just pop them in, and I'll see you in the next one. Have a good evening, gents. See ya. Bye bye.